Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic, again, timely as ever, surviving a financial crisis with basic accounting and tax tips. So we're going to share with you some information I think would be helpful. This is not a one-stop shop for surviving a financial crisis, but I think there will be some great things in here that you might be able to learn from, and you can kind of take back to your business, and just think a little bit differently. If you are moving into a time where you're looking at some challenges in your business. So, why does this actually matter? Because we do go through regular economic downturns, not nationally, internationally, locally in our own businesses. You may have unexpected expenses that pop up out of these uncertain times. Unfortunately, it creates cash flow issues for many people, which can in fact hurt your business. So really, we're all about planning, and we want you to be able to get ahead of things in advance so that you can in fact navigate anything that kind of comes your way. But we want to help you be able to, have the proper financial management tools in place so that you can survive a challenge like this. So it's just a small bump in the road, instead of, ending everything that you've worked so hard to build. So first thing that you're going to want to do is you're going to want to assess your overall financial situation. So what does that mean, right? What's your cash flow? Have you identified any unnecessary expenses? Are there expenses that you need to prioritize, right? Those are things that you need to think about and look at right out of the gate. So again, what's your cash flow position? What are your financial statements saying about your historicals, right? What is your profit and loss saying? What do you have on your balance sheet? What does your cash flow look like? You want to make sure that you have your historical information in place so that you, in fact, can determine what some of the issues that you may have that come up, what they might be. We're all about not only planning, but keeping your financial information up to date. So, if you haven't done your accounting in 4 or 5 months, it becomes really challenging to kind of get that forward-thinking look when you don't actually have historical information to base off of. So again, you want to, make sure you review your cash flow, review your financial statements to date. Are there any unnecessary expenses that you have in your business? We all have them. I have them, right? Are there places right off of the bat that you could cut costs? In many cases, these are the costs that probably won't move a very big needle for you, but it's probably places you're wasting money anyways. So take a few moments to review what you're spending your money on. Are you unnecessarily spending on, again, I'll say it over and over again, we spend a lot of money on software here, probably a lot of software that we don't actually use or need. So again, I would go back, and the first thing I'm going to look at is, where am I spending money that I don't need to be spending money, right? So where can I cut some of my costs? There are also going to be costs that you just can't cut out. And those are going to be your priority, right? What are the essential things that you need to keep your business up and running, right? So that you can get yourself from point A to point B. So what are those? So you almost want to take it and look at it in two different ways. What are the ones that, can't go away because I need these in order to do what we do? And what are the ones that are kind of those extra luxury things that we don't necessarily need and that we can pare out? So again, the first thing you've done is you've assessed your overall financial situation, where your cash flow's at, where you're spending unnecessarily, and where you need to prioritize your money. The next thing you want to do is really look at your cash flow and determine what your cash flow strategies need to be for this upcoming period, right? So what are basic cash flow strategies that you need to have in place pretty much at all times, but in a financial crisis really need to be a lot tighter on? You need to make sure that you have solid accounts receivable processes. You want to go out there and try to negotiate with your vendors or your suppliers if you can. You're going to want to potentially delay any non-essential expenses, right? The things that you thought you were going to need, maybe you're going to pare those out. And then you might also want to look at any kind of short-term financing. These are all things that you want to consider when you are just in your everyday business anyways, but they become more and more important, especially in a financial crisis where you are concerned about your overall cash flow. So what does like a lot of this mean? So you want to make sure you have processes around your accounts receivable. So you want to invoice your customers promptly, right? As soon as the work is done, invoice them. Follow up religiously on late payments. You have a process around when you communicate when payments have been late, X days, 3 days, 5 days, 7 days, whatever it is. You have a solid process around communicating with your customers to follow up on late payments. And in some cases, make it easy for your customers to pay you. Don't make it hard for them to pay you, right? So, do you have easy payment options? Are you potentially offering them the ability, if they pay early, maybe a slight early payment discount, right? Those are all things you want to get creative so that you can, in fact, bring the cash in, the cash that you know that you're going to need. Always, if you can, negotiate with your vendors and suppliers. Ask for better terms, possibly longer payment terms. In some cases, maybe payment terms that also include if you paid early, because sometimes on the other side of it, while you want to hold on to your cash most of the time, it is possible that getting a significant discount on you paying your suppliers earlier may in fact help you in the long run as well. So those are different things that you want to think about. It's not just, hey, can I have longer terms? Well, what if I had shorter terms? What are there abilities to, again, get discounts on overall product, discounts on what we paid? There are a couple of options there. You want to play those out and see exactly what works best for you, especially in your own situation. Um, you know, really, you're going to want to delay non-essential expenses. Again, we talked about paring out things that you don't necessarily need in your business. You need to get back to the core. What is your core business? What are the core expenses that you need in order to generate revenues in that business? And then, get rid of or delay at the least, maybe not entirely get rid of any non-essential expenses, ones that you just don't need. Um, and you may want to consider short-term financing. So, do you have a line of credit? Is it possible for you to, again, utilize that line of credit for a small, short time frame? Do you have any kind of, short-term loans? There are a lot of different options out there. The riskier the situation, typically the higher the cost or the higher the interest costs. So, they may be an option. It's something that you need to seriously consider because it could get quite expensive for you to repay those options down the road. Again, something to consider. It's not necessarily something you will do, but something to kind of push through any kind of forecasting models that you may be developing to determine whether it makes sense from a cash flow perspective to utilize those type of things. And as always, when it comes to borrowing, have your borrowing relationships in play before you need them. For example, in good times, go out there, get that line of credit with the bank. You may not use it. You may not use it for a long while. You may not ever need to use it, but you have it in place in good times that should you need to utilize it down the road, it's there to be there and take advantage of in the short term should you need it. Don't wait to go borrow money when things have started to get shaky in your business. It becomes very challenging to borrow money at that point. So, again, build your relationship with your local bank, get your lines of credit, your business loans in place before things start to get a little shaky. And then you have that kind of that thing to fall back on should you, in fact, need to fall back on any kind of short term borrowing. There are, going to be a couple of tax strategies that you can take advantage of that will, ease your financial burdens. It may not completely eliminate them, but it might make it a little bit easier for you to pay back any kind of, taxes that you may owe. So, for example, there is always going to be payment plans and tax relief options. You always want to make sure that you maximize your deductions and credits that are available to your business. So it's not just a strategy for in tough times. This is an all the time strategy, but you want to be very diligent about it, especially in a financial crisis. You may want to adjust your estimated tax payments. It's something to think about. Again, with everything else, it might ease the financial burden in a short term, but you have to also consider those liabilities may still be there in the long term. Again, potentially filing extensions when you need them. Again, it's typically a filing an extension for time to file, not necessarily time to pay, but again, becomes a strategy or an option available to you if you are trying to ease a financial burden you have at a moment in time, when it comes to your overall tax liabilities. So what does that mean kind of in a little bit more detail? So IRS, you've got your installment agreements, your payment plans. There may be tax relief options. I would be careful with the very aggressive ones that you hear about, the commercials you see on TV, how they saved individuals so much money. In some cases, those are a little bit, if it's hard to believe, it may not in actuality be real. But installment agreements are real. You can go out up to 72 months on an installment agreement. You are paying penalties and an interest on that balance due as you are paying out that installment agreement, but it does help you to ease the actual cash flowing out of your business at a specific time if you have that option. There are also offers and compromise available. Again, those are a little bit more challenging to get, but it is an option. These are all things that you can look at and determine whether or not it makes sense for you and your business at that moment in time. Maximize your deductions and your credits. Again, make sure you're getting everything you're eligible to get, right? Are you maximizing all the expenses you can, in fact, get in your business? Are there tax credits that you aren't taking advantage of that you could take advantage that will ultimately bring your tax burden down? So something like maximizing deductions and credits is something you always want to be doing, but you want to be very vigilant about it during a financial crisis because it could make a significant difference in the overall liability that you have due at that moment in time. You may want to consider adjusting your estimated tax payments. Again, if your income has significantly decreased, over a 3-month period, a 6-month period, then you want to adjust the estimates that you're making. You really want to alter the estimates you're making related to your tax liabilities based on actual numbers. So in our case, we take our actuals at the quarters and we develop out estimates based on where the client has gotten to that point in time and what we think is going to happen through the balance of the year so we can get much closer on an estimate, especially in a situation where income may have gone down year over year. So you always want to go back and review what you're paying in for estimates so that, again, you could potentially hold on to your money a little bit longer, especially if your income has come down year over year. Last thing, again, potentially filing extensions when you need them. Again, you need to file in a timely manner. And so the extension for time is an extension of time to file, not necessarily to pay. But in some cases, if you've at least filed, you have eliminated the not filing penalties that are associated with it. Again, you're going to still have that tax liability, and then you may potentially look for a way for example, an installment agreement. But again, not filing and not paying is even more expensive than filing and not paying. So the non-filing can be very expensive. So you want to still file the return, even if you don't have the ability to pay, because then you've got some options in terms of payment plans. So let's think a little bit more long-term. So what are you doing from a long-term planning perspective, especially if there's the concern that this crisis could last longer than that short-term 3-6 months? Are you going out 12 plus months? You're trying to last a longer period of time. What are some of the things that you want to think about when you are trying to, be resilient over a much longer period of time? You want to build an emergency fund. So in good times, you want to go out there and get that line of credit from the bank so that you can very easily, have it in place should you need it. Same thing with that emergency fund. When times are good, you need to be saving your money. You need to be putting some money aside for that rainy day. We've all gone through rainy days in our business. So again, start building that emergency fund. You would do it for your own personal finances. You really want to do it in your business also, because there is always going to be a financial downturn somewhere around the corner in every business, every industry. It is cyclical. If you look at it over 100 years, there's always going to be cycles in business. So there's going to be a downturn. You just want to be as prepared as possible for that downturn. You want to get very clear on your budgeting and your forecasting. So you might have done budgeting or forecasting at the beginning of the year, but now things have changed. Has your perspective on what your overall income going to be for the latter part of the year? You need to go back and make adjustments to that budgeting and forecasting based on those new assumptions. Maybe you expect your income to go down, but your core business, you're trying to keep your core business intact. So you've budgeted for core business. You've taken out the extraneous things that you don't need. What does that look like, right? Let's get out there and try to anticipate on paper what the challenges might be and what we might need to try to overcome. But that means going out there and making adjustments and improving and getting very clear on your budgeting and your forecasting for the year. If you have the ability, you want to diversify your income streams. Are you getting your revenues from just one place? You don't necessarily want to be dependent on that just one place. So are there other ways to bring revenues in from different areas, different revenue streams? Again, if you want to try to not be dependent upon one place to get all of your revenues, that can create challenges for you, especially when all one stream kind of dries up. So, are there ways for you to earn money in other avenues in order to get you through a financial crisis? As always, we recommend that you work with your tax advisor, your accountant, and even any other financial professionals that you use, someone you're working from a personal financial planning standpoint. These are the people that you want to have in your corner, the ones that you want to have reach out to you. Every time I get very regularly, I have my own personal financial person that I work with. They reach out to us on a regular basis, but things get a little wonky. The market got wonky in the last couple of weeks. They reached out trying to get my temp, see exactly what's going on, where I feel like I'm at in my own business. So you need people like that in your business too, right? As a business owner, you need to have all of those people working with you, partnering with you to help you with your business. So again, seek that guidance from others who aren't necessarily directly integrated in your industry, but are helping you with other things so that you can get a good picture of what's going on overall, or where you think that you might have some obstacles that you might have to overcome, or things that you're worrying about that may not necessarily be a thing that you should be concerned about at the moment, and so on. So it's great to have that. You need to have that core group of professionals there to support you, to ensure that you are staying on track, thinking about the things that maybe you haven't thought of. It's great to have those other minds to say, hey, what about these kinds of things? So again, always go back to your core group of professionals that are supporting you in your business. If you have any questions, please feel free to drop them in the chat. We'd love to hear from you. As always, please follow us here on Facebook. We are also on Instagram and YouTube. We are the Construction CPA at all of them. I look forward to seeing you here every Friday. As always, have a wonderful day, and we'll see you next week.